first tick on the index, down about 130 points, slipped below that 20,000 mark.
Clearly a down day, right, for our markets. And there are two culprits. One is HDFC Bank and the other one is Reliance Industries.
From the day's highs, the fall is about 126 points, and at no point in the day have we seen any kind of respite in the market.
The Nifty trading pretty close to the second downward level that we put out in the morning, which is 19,914. We're down 220 points, 19,910.
Hello and welcome to Markets Today, the show where we track around 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Let's run you through the headlines for the day. Stocks stumble on the Wall Street. Financials underperform, keeping the market under pressure. The Nifty drops below 20,000 mark, making its worst single-day fall in 2 months. The Nifty Metal Index is the top sectoral loser. All sectoral indices end in the red. HDFC Bank shares its pro forma details post-merger with HDFC, revealing some pressure on margins and return ratios, as well as some asset quality impact. The stock slips as analysts lower their expectations. RR Cabell lists at a healthy premium to its offer price. It's the first IPO to list in T+2 days, in keeping with SEBI's new listing timeline. Management tells CNBC-TV18 that they planned a capex of around 150 crore rupees for FY24. BlueStar hits a fresh 52-week high in today as it launches a 1,000 crore QIP. Bullish analyst commentary gives JK Tyre, Philip, Dam Capital initiates a buy rating on the stock. And SJVN rallies over 6% after signing an important MOU with the power finance company. Crude oil prices fall by over $1 ahead of the US Federal Reserve's interest rate decision. Prices tumble despite a bigger-than-expected draw in US stockpiles and weak US shale output. Well, here's what we have lined up on the store for you. In Market Opinion, we have Vetri Subramanian, the Chief Investment Officer at UTI AMC. Well, getting straight to what was a forgettable day for the bulls. The Nifty, the Sensex, both of them were down close to under %. In fact, the Nifty saw its worst single-day fall in 2 months and failed to hold on to the 20,000-odd mark. The major fall in the banks came after Nomura downgraded the stock post its analyst meet, citing pressure on margins as well as return ratios on HDFC Bank. Meanwhile, mid-caps, they outperformed the blue chips. Prashant joins us to fill us in with a roundup of the day's trading action. Prashant?
Well, a down day and a deep cut, deeper than what we are used to. So the Nifty up on your screen, not at the day's low. There was a bit of a recovery, but not by much. The banks also in better shape as compared to the Nifty, and I'll come to that in terms of stocks, etc. in a bit. Broader markets, much better. I mean, the mid-cap index ending 0.25% lower. Small caps, actually, the index recovering about 0.5% in the last 60 minutes, ending down about 0.75%. I mean, it was clear from the morning that HDFC Bank would be the pressure point after disclosures made that analyst day. That was the big loser, adding the maximum pressure to the Nifty index. JSW Steel, there was no help from Reliance, and we've been pointing out how, in the uptrend recently, Reliance did not participate, and it's now pulling in the other direction. BPCL, Dr. Reddy's, and Ultratech are some of the other names which put pressure. Old economy, public sector names, which are the ones which did well. So you had Power Grid, Coal India, ONGC, NTPC, all nothing large on the upside, but they all ended higher. PSU Bank started the day higher, but then complete turnaround there. IOB, Central Bank, and UCO Bank were the big losers. Big winners recently like BSC, GMR Power. They pulled back. There was Cyient, which was lower, Kalyan Jewelers, RK Forgings. And of course, there's Idea Forge, 950, absolutely has taken it on the chin since the listing at about 1350 or so. Now, broader gains coming through. There were a few winners, although market breadth was sharply negative. SJV and BlueStar. There was Suzlon, which has crossed 25 rupees. IFCI, Varroc, JK Tyre was a big winner. There were names like Thermax and Nazara Technologies, which were also up and about. I think today, of course, is the big Fed decision. Although no change is expected, it still remains important. The commentary from the Fed chair, etc. But I think beyond the Fed, the big talking point and the worry is, will oil remain here and perhaps even head higher? That is something which markets do not like at all. And that's showing up not just in equities, but in the rupee as well. Back to you.
Well, thanks a lot for that, Prashant. Moving to the second headline now. HDFC Bank tumbled close to around 4% following its analyst meet that they held on Monday. The meet highlighted some pressure on margins as well as return ratios, as well as some pressure on asset quality. Abhishek Kothari joins us to fill us in with all of that. Abhishek, tell us the key takeaways and its impact as well.
Well, HDFC Bank held the analyst meet on Monday post-market hours. Now, it shared details with respect to pro forma merged numbers of the lender along with the numbers of HDFC Limited. The key takeaways is that there will be a decline in net interest margins on total assets by as much as 30 to 40 basis points to about 3.7% to 3.8% from the 4.1% net interest margin on assets that was recorded in Q1 FY24. Now, the cost-to-income ratio stabilization is lower than street anticipation, and this is due to accounting methodology changes that is there. So management has said that the cost to income ratio will decline to 40% versus 43% that they had in Q1 FY24. So the return ratios on account of decline in net interest margin will decline to about 1.9% to 2% from the 2.1% that the bank recorded in Q1 FY24, while the ROE, that is return on equity, is seen around the 16% level from 17.2% that the bank did in Q1 FY24. So capital adequacy ratio will increase to about 19.2% from 18.9% that was recorded in Q1 of FY24. The key negative surprise has come in the form of asset quality of HDFC Limited, the non-individual segment. So the individual segment gross NPA ratio has increased to about 1% versus 0.75% at the end of March 2023, while the non-individual gross NPA ratio has actually spiked up to 6.7% from 2.9% that was there as of FY23. We have Nomura's estimate on post-merger for HDFC Bank versus the numbers that they have recorded or they have estimated for ICICI Bank and Axis Bank for FY24. So Nomura estimates a decline in net interest margin for HDFC Bank by 30 basis points to about 3.5%. Now, they are estimating ICICI Bank's net interest margin to be at around 4.6%, and Axis Bank net interest margin is seen at 3.84%. Hence, on net interest margin, HDFC Bank will underperform the peers for FY24 as per Nomura's estimate. Now, Nomura also estimates the cost to income ratio to increase for HDFC Bank to about 40.1% from 37.5% that they had estimated earlier. Now, this is better than peers, wherein ICICI Bank's number is estimated to be around 40.4% for FY24, and Axis Bank is seen around 47.2% for FY24. Return on asset of HDFC Bank for FY24 has been trimmed down to about 1.7% from 1.9% that they had estimated earlier. For ICICI Bank, Nomura estimates ROA to be better than that of HDFC Bank, about 2.2%, and for Axis Bank, they have the same level of HDFC Bank at about 1.7%. However, the key difference is the ROE profile versus peer for HDFC Bank. So peers will have better ROE profile than HDFC Bank for FY24. Nomura estimates the ROE of HDFC Bank to come down to about 14.2% versus 15% earlier, versus 17.7% that they have estimated for ICICI Bank and about 18.1% that they have estimated for Axis Bank for FY24. So in terms of valuations, based on the book value estimate of Nomura for the three lenders, HDFC Bank is now trading at a price to book value based on FY24 numbers at 2.6x, while ICICI Bank is trading at 3x and Axis Bank is trading at 2.2x. Momentum on net interest margin and return ratios for FY24 of HDFC Bank versus peers like ICICI Bank and Axis Bank may be on investors' radar, and hence valuation changes may be closely watched by the investors.
All right, thanks a lot for that, Abhishek. Well, on that note, let's hear out what Vetri Subramaniam, Chief Investment Officer, had to say about the banking space on the whole, and also he gave us his opinion on the markets. Let's hear him out.
We look at bank stocks is that you have to be able to create at least a 1% sort of return on assets to get to a point where you can create some shareholder value. If you're not able to create a 1% ROA, then that business model is in trouble in the medium to longer term. The bigger challenge really is that when I look at the way the data is coming in terms of incremental market share, both on deposits and on credit, then I think, there's a set of about 5 to 6 banks, both private and public, which are really starting to take in 2/3 to 70% of all deposit and credit market share. Small and mid caps have really been a big surprise for me. Honestly, even at the start of this year, I would have not voted for such strong outperformance for mid and small caps relative to large caps. My train of thought and thought process is always linked to the fact that starting valuations reflect expectations, and therefore they tend to be a weight on the forward returns going ahead.
Well, moving on then to the third headline today. Wire and cables manufacturer RR Cable debuted at a premium of around 14% on the bourses. Well, the company got listed at a price of close to under 1,200 rupees per share. That compares with its IPO price of around 1,000 rupees per share. Surbhi Sutaria joins us to fill us in with more details. Surbhi?
So RR Cable, it was a strong listing, and that was expected because the subscription was over 19 times. Now most of the money that they have raised is an offer for sale. So TPG's stake has come down from 16% to 5% post the IPO. Now it's a wires and cables company with the presence in FMEG space as well. They have 7% market share in the cables and wires space. Around 90% of their revenues comes from wires and cables, of which 70% is wires and 30% is cables, and that's where it's different from Polycab, because Polycab is largely into the cable space. 11% of the revenues comes from the FMEG space. The other differentiation in this company is that 74% of the revenues comes from the B2C channel. So they have a strong presence in the B2C space as well. When you look at the financials, they're pretty strong. In the last 3 years, the compounded revenue growth rate was over 30%. EBITDA and PAT both have grown at over 15% compounded rate. When you compare it to the peers, it's more comparable to the likes of Finolex and KEI, because RR Cable's revenue is 5,500 odd crores, and Finolex and KEI both are in the range of 4,000 and 7,000 respectively. On the margin front, it is the lowest amongst the peers. It is at 6% EBITDA margins for FY23, whereas the others are at 7% and 10%, and that is largely because it has more exposure to the wires segment, which has lesser margins when you compare it to the cables. Now, when you look at the valuations, FY24 basis, it is trading at close to 50 times FY24 PE, which is similar to the Polycab levels. We have spoken to the management, and they said that they have a planned capex of 500 crores, of which 150 crores will be done in FY23, 350 crores in FY24, and the asset turn on this capex will be close to 5 times. They can do 7,000 of revenues with the existing capacity itself, and they're also looking to increase their presence in the export market.
Thanks a lot for that, Surbhi. Well, on that note, though, we'll slip into a short break. We'll be back with all the other headlines that we're tracking for you. Don't go anywhere. Welcome back. You're tuned in to Markets Today. Well, let's run you through the fourth headline today then. BlueStar gained more than 10% after launching a QIP, that's qualified institutional placement, to raise 1,000 crore rupees. The funds will be used towards sparing some part of the company's debt and expanding their Sri City plant. Surbhi joins us to give us a quick analysis on what got the stock excited today. Surbhi?
So they're looking to raise up to 1,000 crores via the QIP route. The floor price is set at 785 rupees per share. Now this was anticipated because with their results, they had also taken the approval from the board to raise 1,000 crores via the QIP route. So it was a known thing. Now the management had joined us post the results, and they had said that they will raise these funds which will go towards debt reduction and also the expansion of their Sri City plant. Currently, the company has a gross debt of 600 crores and net debt of 283 crores. Also, on their conference call, they had indicated that the capex for the next 3 years is earmarked at 750 crores, and a large part of this capex will be done in FY24 itself. The Sri City plant capacity is currently at 300,000 units, and they aim to get it up to 1.2 million units, and this expansion will be done over 2 phases. So, looks like a large part of this QIP will go towards the Sri City plant expansion, and that is what probably the street is also liking, and that is why you can see the stock is surging in trade today.
That's Surbhi. Thanks a lot for that. Well, moving on then, straight run. Hydroelectric power producer HDFC rallied close to 7% after it signed an MOU with Power Finance Corporation Limited. The MOU includes a diversified portfolio for the renewable energy projects and thermal projects. Vivek joins us to tell us more about HDFC, which was a big outperformer today. Vivek, take it away.
A very important development. We'll have a look at the news flow, that's come about today, and also look at, what's exactly transpired for the company, in just the last year that's caused the stock to go up over 2.5 times. And since June, the stock has more than doubled. So first, let's have a look at the news flow today. The company signed an MOU with PFC. Now, this is for financial assistance for renewable energy projects as well as a thermal generation project. So the total project cost outlay works out to around 1.18 lakh crore, which is quite significant. And the term loan financial assistance is tentatively proposed at 70% of the total project cost. Now, like we mentioned, the stock has done exceedingly well in the past year, and especially in the last 6 months or so. What's actually happened is that post Q1, the management upgraded, the renewable energy capacity guidance. Earlier, they had targeted, 2.7 gigawatts by FY25, but now what they're saying is that they're going to incrementally add and reach almost 7.7 gigawatts by FY26. Along with that, the management also has stated ambitions of reaching 10 gigawatt capacity by FY26, 25,000 megawatts or 25 gigawatt by 2030, and in that, more than 50% is expected to come from renewable sources. And along with that, one near-term important trigger is going to be the commissioning of two large projects. Number one is the Arun 3 project as well as the BlueStar project, which is expected to aid earnings in the coming years.
Thanks a lot for that, Vivek. Well, moving to the fifth headline today, oil prices fell by close to around $1 ahead of the U.S. Federal Reserve's interest rate decision. Prices fell despite a bigger than expected draw on U.S. stockpiles and weak U.S. shale output. Manisha Gupta joins us to fill us in with more details on that. Manisha?
We've seen almost $96 a barrel as well. So from those kind of levels, there is some definite profit taking coming in, but it still is near 10-month highs. Markets have seen the UBS report and some reaction to it as well, which suggested that above $95 a barrel, they have advised their clients to take profits, and that's perhaps what we see overnight as well. But UBS also says that 95 is their target for year-end, and they believe that the crude prices will trade between $90 to $100 a barrel for the rest of 2023. The markets have been clearly reacting to the output cuts from Russia and Saudi Arabia. Russia also is saying that they are considering an export duty of $250 a ton on many of their crude products there. The U.S. output also has seen a decline for the month of October to a May 2023 low, and this is going to be a third straight month of decline in output coming in from U.S. It also is about Saudi Arabia now saying that they're expecting the global demand by 2030 also coming down to almost 110 million barrels per day. The earlier estimates were at 125. It also is about Saudi Arabia justifying output cuts, suggesting that the Chinese demand is still weak, and the demand from US and much of Europe is also yet picking up, and the higher interest rates will perhaps continue to weigh onto the prices. From here on, it really is going to be about the central banks. Remember, we have the US, China, Bank of Japan, Swiss and Norway, all of those central bank meetings happening in this week, and further cues would come in from that.
Thanks a lot for that, Manisha. Well, moving on then, Reliance Jio launched Jio Air Fiber services yesterday in 8 metro cities. Jio Air Fiber will cater to home entertainment, smart home services and high-speed broadband. Rima standing by to fill us in with all of those details. Well, Rima, tell us more.
Let me start by explaining what is an air fiber. It's a broadband offering, which means you get Wi-Fi at home, but instead of the signal coming to you via an optic fiber or cable, this is wireless. Now think of it as a Wi-Fi hotspot, a router, a dongle. The difference is an air fiber will give you high-speed 5G technology to give you the connectivity instead of a fiber optic. So all you need to do is purchase the Jio Fiber unit, place it at a convenient spot in your house, plug it in and turn it on. Now, if you remember, the Ambanis had announced in their AGM that they will be launching Jio Air Fiber on the 19th of September, that's yesterday, on the auspicious occasion of Ganesh Chaturthi. But at that time, they did not disclose the pricing. The pricing was disclosed yesterday. Now, Jio Air Fiber has 3 plans. Entry level is $599, 30 Mbps of speed, unlimited data, 550 plus digital channel and 14 apps. The next pricing is at $899, where the speed is higher at 100 Mbps. But if you want to get in your Netflix Jio Cinema Premium, then you need to pay 1,199. They also have Jio Fiber Max plans, and these are the more expensive ones. They start at 1,499, but they go as high as 3,999 for higher speed and more perks. Now, Bharti Airtel also has a similar offering. They have commenced trial of its fixed wireless access in Delhi and Mumbai. Currently, Bharti is offering you one plan, which is for a monthly tariff of $799. Comparing the two, for the same speed of 100 Mbps, Jio is going to be charging you $899. Airtel's Extreme Air Fiber is at $799. But with Jio, you also get apps. You get 14 apps. They include a Disney Hotstar, Sony Live, Z5, but it doesn't include an Amazon Prime or a Netflix. Also, for Bharti Airtel, you will need to pay a security deposit of 2,500 rupees. For Jio Air Fiber, there is no such security deposit. In fact, you get a router, a set-top box, a remote free. But there will be an installation charge of 1,000 rupees unless you take the annual subscription. Then the fee is waived. The other big difference is that Jio Air Fiber is an official launch. It's gone live in 8 cities in India. But right now for Bharti Airtel, it's only in the trial stage. Pilot projects are going on. Now getting back to what this means for Jio. Now Jio is targeting an addressable market of 200 million homes. Now this is quite large according to analysts. In fact, many analysts believe that this target of 200 million could be on the aggressive side.
Interesting stuff, Reema. Thanks a lot for that. But on that note, we have completely run out of time on this edition of Markets Today. You stay tuned for more news and updates.